our tardiness and joining 3 minutes after 2 o'clock, but unfortunately the weather did not help us out technology-wise. I think all of us are sitting in rooms with fans or windows open to try and keep us warm, but we're here now, so hopefully we can start this. Hopefully everyone's in an air-conditioned office because it's very stifling. I don't know if my colleagues, I know one who I was speaking to earlier is not in an air-conditioned room, but let's start. So I'm pleased to welcome you to today's panel discussion, how intelligent data and integrated payments are reshaping SME lending. My name is Jason O'Shaughnessy, Director of Lending here at Yapily, and I will be your moderator for the next hour. Today we are diving deep into how real-time data, AI-powered credit decisioning, and account-to-account payments are converging to completely transform risk management and the SME loan lifecycle. Whether you're in underwriting, risk, or product, we're here to look at what's working right now and where the industry is heading to. To help us unpack all of this, I'm joined by 3 leading industry experts who are on the front line of this evolution, although I thought 2 of them weren't going to make it today. Please welcome Tigana Sari, product owner at Alika Bank, Kai Hunter, COO, chair at Lovey, Kate Kennedy, COO at Navris. Welcome, guys. Finally, we'll be introducing poll questions throughout today's panel discussion, and we highly encourage everybody to participate in that, and we'll share the feedback as well during that time. So with that in mind, and bearing we've started a little bit late, let's dive straight into the first segment, and I'm split this by 4 segments. We'll go through each segment which is related, and I've got a few questions on each for the panel. So the SME lending market is under growing pressure to move faster and make better decisions with the data available to us today. This segment explores where the industry stands today and what is holding teams back. The first question I have here is really aimed at Tigana to ask first, because I think it has more relevance. So what does the current status of underwriting look like at your organization, and where are the biggest friction points? And also, Tigana, Kai, and Kate, feel free to, if you want to talk a bit about your organizations, what you're doing, your role, feel free.
Yep. Thank you, Jason. Hi, everyone. So it's been a really interesting journey. Even in the last 12 months, 6 months, everything is moving so fast, where we keep evolving as the world of technology and AI also evolve. But for us, what's the most important thing in the world of lending when it comes to kind of like speedy decisions, it's not actually about the decision-making part. It's about what goes into the decision to make it as fast as possible. So, for example, lending decisions are made from the underwriters. They need a bunch of documents, and I think this is what we see, a lot of documents coming from all sorts of different sources, and we identify like, for those that we can get from the open banking or from the API, from the credit scoring or property valuation. But things like, for example, financial statements and things like this is still being manually looked at by the humans. So this is where we really identify how we can really streamline the process. And we have built a very robust kind of agentic AI where we are able to, with certain parameters and certain frameworks, extract the data that we get, and therefore what is being given to us is packaged in a way where we can streamline the decisions. So that's what's been kind of happening like that. And this is a continuous process improvements, a lot of governance, a lot of kind of risk management are in place to make sure that we're kind of on the right track.
Fantastic. That's really interesting. And actually, I've got some questions later on about what Alika are doing with AI, because you're doing some cool stuff in the marketplace. Kate, did you want to extend on any of that? Anything else to add?
Yeah, I think it's interesting. The first sort of thing I might say is that I don't think there is any state of underwriting. So Navrisk is born out of a lender. We create the intelligence layer that sits on top of bank transaction data. But we were first and foremost lenders, and our sister company is a lender. So I think when you think about the state of underwriting, there's a massive spectrum. I think there's a massive range of SMEs, as we know, 5.4 million, 5.5 million of them, but most of those are micro. Some of them are medium-sized with better data, but fundamentally, this is about a spectrum. It also depends on the loan that you're providing, both its term and the extent at which you have recourse, because all of those things you have to unpack them to work out how far you go with automation. And at the end of the day, not to counter really what Tigana says, but to me, it's not about the speed of the decision. It's about the correctness of the decision. And, you know, manual underwriting still has its place. The human has to stay in the loop, provide the human better data to be able to, you know, put his judgment across, or his or her judgment across, then you get to a better decision. So I think it's quite nuanced, as all these things are, about who you are, who you're lending to, what your recourse is, and what your process is.
Thanks for that, Kate. And I'll get Kai to jump in, but just on that point, do you think at the moment AI is better suited for the more simple applications, maybe the low risk, the very easy ones to do? If I think about business lending, it might be aimed at the very small SMEs looking for a certain amount of money versus a company coming in and asking for a lot more.
Well, actually, I think it's two things, Jason, because it's about granularity. So the more smaller loans you make, the less each individual loan matters. So there's about portfolio granularity. But I think what Tigana was pointing to, it's also about what information do you have. So if you have good, solid information and you have sensible agents that can read it well, then you can have more automation. But if you don't have that solid information base, then that's where, you know, where agentic will kind of, if you like, industrialize poor logic. So you need to make sure you have good data. So I'd say it's two things that depend.
Cool. Kai?
Yeah, interestingly for Lovey, we're a hybrid broker lender. So why is that relevant? We lend on our own book and we broker out to the marketplace. That gives us a really privileged position that we can see the breadth of market, what people are doing. We might not get into the nuances of what they're doing behind the scenes, but we can see what their credit appetite, their credit and eligibility criteria is, pricing, quantum, term, tenure. So that gives us a good breadth of knowledge. Interestingly, the credit rules, so the logic for us, we haven't finessed or fine-tuned our logic since April 25. So although we go through an iterative process, what that's saying with the advancement and the speed of advancement of AI and technology, the fundamentals haven't changed a great deal. How we review that information and how we're given it is improving greatly. There's still some work to do. We're still struggling, like most lenders, with the consistency of data and then the commonality of data. So Tigani mentioned things like property valuations, so technology like Home Track, APIs into land registry to see if people own properties, turnover. You can get from Cato data. Keys is really good to build some income statement data. So all of the data sources, all that's happening, we're still getting those same data sources in, but how quickly we can digest it, make decisions. And the decision tree is still the same. So it's still quantitative data, a bit of qualitative overview. And then I think all we're moving is, as an industry, we're moving away from retrospective data, you know, what their last filed accounts were, retrospective data in terms of bank statements, open banking and what will be open finance, moving it right up to today and to this afternoon, you know, contemporary perpetual balances, and then moving down into machine learning and predictive analytics and where we get to in the future. So I think in terms of your answer on the flow, though, I don't think it's quantum based. I think it's how quickly you can say yes, regardless of size. And I think that comes back to what's been said commonly on this call is if you've got the data and you can make a decision, an informed decision, then the answer is yes, regardless of loan value or structure or security. But if you don't have the data, it's the outliers. How do you serve the broader market and the underserved, the nuanced where you do need human intervention to make a good decision? And I think the biggest thing for us we're seeing is customer experience and outcomes through having better technology.
Yeah, and that makes a lot of sense. And actually, all three answers lead quite nicely into the next question, which is, what does your data infrastructure need to look like before meaningful automation becomes possible? Because like you say, that data set is so important, you know, to make a meaningful decision on bad data or not all of the data you need makes it more difficult. So I'll push that back to you, Kai, as soon as you're answering, and then I'll open it up to everyone else.
Yeah, sure. Thank you for that. So in terms of data for us, we're pushing heavily for not regulation, but for some legislative intervention. So open banking is great, but there are banks that aren't part of open banking. And then within open banking, different banks' terminology for things changes on the payments. So even if you automate, if you can't give a good data dictionary to AI and you start using agentics, if you can't say time to pay, time arrangement, arrangement HMRC, whatever the different definitions are, what definitions you've got for high cost short-term credit or high interest credit, different banks, different definitions, related party transactions, associated companies, common ownership, all of those different, it's really hard to draw a decision engine when the rules, the what ifs are so broad. So as an industry, we need to get to a consistent data dictionary. And I think legislation could do that. I mean, even access to, not necessarily for this call, but even access to HMRC data. We're all corroborating that HMRC has been paid PAYE, national insurance, corporation tax. There must be a way of providing access. And likewise on open banking, there must be a way to get continuous access while there's indebtedness. So we're all using it to make a credit decision. But then if we onboard the client, wouldn't it be great to have, for monitoring purposes, continual access to that contemporary bank data? So yeah, I think more consistency, more commonality, so we can build rules-based decisioning that we know is safe. At the moment, I think you'll get a few declines and a few poor customer experiences through just because of the inconsistency.
Yeah, and Tigana, I leave it to you because obviously you guys done a lot around AI.
Yeah, I think for us it's been interesting because we also for our kind of lending products brokers, therefore we need to be able to, we still see the process in which email communications are still being used in order to like discuss or make an application, and we still see this is where previously humans are pretty much still needs to be kind of control of, to kind of like keep track of who's coming through and who's not. So for us, I think the kind of the power in which we really see kind of the impact is where we're able to read through all of the emails and we'll be able to extract the data again around the documents attachments, for example, and being able to, when the broker go to our broker portal and start making application, everything is already pre-filled. So it's not about kind of like bypassing that, the user to be kind of in charge of their application, but it's about like, how can we make it easier? So it's not removing control, but it's also like supplementary to the actual already process that is deemed quite manual so far.
Yeah, no, that's helpful to go on. And final one for UK on this question, because I know you guys suck in data from a lot of sources to power NavRisk.
Yeah, I mean, we've gone all in on open banking. I think it's, and I say this as a lender as well, it's something like 55% of people, SME leaders, will borrow personally because they can't get a loan that's relevant to them, and 62% abandon the process when they're partway through it. So I think it's on all of us, lenders or interpreters, to create a fairer access to SMEs. Effectively, capital there is, data is there, but interpretation isn't. So a lot of what Kaya said, we've gone all in on open banking. You can actually interpret, you can read an awful lot of that, but it requires you to standardize, enrich that, and then put lending grade insight on top. And why I believe passionately about that is because their borrowers have that data. We're not asking them to dress it up, make it pink, make it landscape, do whatever. They have the data. We as lenders and interpreters, it's on us to interpret it consistently and be able to take away some of the heavy lifting from the underlying intended borrower, because the data is there. It tells us much more than anything else they'll say about the business. It tells you how management's behaving. You can't get more granular than what flows through bank account. Our job to interpret it. So we're all in on it, and I think that's where kind of access lies, is interpreting better for the SME.
Fantastic. I always love hearing that open banking is an important part to play in the lending process. Actually, onto the final question.
Jason, you didn't pay me.
No, I know. Sorry, Kate. So the final question here, which kind of extends on a lot of the answers, is how do your teams think about trust when it comes to automated data versus that human review? I mean, Kate, since you've answered the last question, I'll start with you and then go around.
Look, that's a really good question. it's all about having lending grade insight as accurate as possible. As soon as something is, we can identify 99% of debt. I'd rather identify that, put that in front of teams, so they can trust in it. I'd probably over-identify so that they can rule stuff out. But it's all about, is what you're saying with the data accurate and representative? Then you can trust it. And then I think as the underwriter, or indeed the portfolio manager, and we should come on to, Kai raised it, so always on monitoring. To me, then it's about what conversations do you form as the underwriter or the portfolio manager with your customer about that data? Because you form the right conversations, you can build trust. But if you're using the data sort of to admonish, then you destroy trust. So get the data right, form the right conversations.
Yeah, that makes sense. Kai?
Two things I'll try and capture. Automation, what will it do? It'll get the people that could already borrow the money quicker in a beautiful journey, good user experience, great outcome, wonderful, isn't that great? But then for the underserved, the people that can't get money, or the people that their current circumstances, that 99% of the data will tell us what their current circumstances are. It doesn't give us what's going to happen tomorrow. What contract have they just signed? What staff have they just hired? What premises have they moved to? What will happen if they recapitalize? What will happen in the vest? All of that's in the future, and you can't get data for the future. All you can do is, use predictive analytics or use some sort of roll forward and look at where they've been and then estimate and guess where they've been. I think the dichotomy for the industry is, how do you serve the people that are falling through and getting declines without somebody taking on the ownership of education, sharing back why it was declined? Clearly, we're not talking about fraud or criminal activity, but if it's just a decline because computer says no, credit reference agency, open banking, it's just painting a poor picture. In consumer space, we've got access to that data and we can learn good habits, how much to spend on credit card, how much to leave in credit balances, don't have hardcore borrowing, fluctuate in credit and debit. I think for SMEs, who's going to take on? Is it the accountant? Is it the staff in-house? Is it lenders? Is it the brokers? Who's going to educate SMEs to get the right form of finance for the right form of activity that they want to embark upon, when, if we all move towards AI agentics and it is just computer says yes or no? We're trying to move as a broker and a lender, single points of failure. So if open banking is just painting a poor picture, whether that's around cash flow available for debt servicing, debt service coverage ratio, whatever the reason for decline is, the other circumstances, the other quantitative data that we can get access to, or the other qualitative data we can get access to, is there a compelling reason why we can say yes? And I think building AI agentics to know, what if, it depends, those variables that are hard to code in a binary fashion, if we can move to that world, then wonderful. But until then, I think human intervention or human engagement for the outliers is still going to be needed if we want to do the right thing. Yeah.
I just want to jump in on what Kai said, because he's on a key point for me. That is explainability. Getting constant no's, but no one telling you why, because the patterns that you're generating don't satisfy lenders. Tell me the patterns I should be generating. Tell me that I shouldn't buy from Amazon Prime on Christmas Day because it looks like a personal expense. Tell me those things that are, that are impacting your ability. Is it the volatility? Is it I'm moving money outside of a group into another company that I'm also a director of? Help me understand how I can become lendable too. So I think I didn't want to lose the explainability point, Kai, because I think it's very well made.
Anything to add to that, Tigana? Oh, you're on mute, Tigana.
Oh.
How many times have we practiced this?
Now you've gone back on mute.
Oh, you're on mute again.
Am I on?
You're off.
Okay, sorry.
No,
there's a drilling outside, so I'm trying not to. But yes, I think I wanted to come maybe from a slightly different angle, where I think for us, trust comes from right from the beginning of how we build this agentic AI. And for us, it's about involving our underwriters. We have brokers who have been supporting this scheme from the very start. So therefore, they understand what the guardrails are that we are putting towards, and also they are involved with in terms of establishing the accuracy. So one of the things that we do is our agentic AI has to outperform how if a human would have done it. So we do a comparative analysis side by side. So we make sure that, okay, so this is going to have the outcome where it's not going to kind of like drift away. We have this terms of like model drift, for example. So the team has always been, and then the brokers and the underwriters have always been kind of in that front of mind when it comes to build. So therefore, the trust is around. You see what the failures are. You see all the models that we're trying out with, and therefore there's a very, very high confidence that what we are actually outputting, and therefore going into the decision making and so on are in a good place. So.
Cool. Yeah, no, that makes absolute sense. Right, before we get on to the segment, we'll run a poll and let's see what people's views are. So we'll put that poll up now. What is the biggest gap in your current creditworthiness process? And I'll give people a few seconds to answer that. Right, that's starting to come in. Let me start the next segment and then I'll go through the answers of the poll, which I think the audience has access to anyway. But next I want to look at how data enrichment bridges the gap between raw bank data and something AI can reliably act on, and what that journey looks like in practice. So with that in mind, and I'll aim this at UK, how are you currently working with data pulled directly from bank feeds, and where does it fall short?
So I think, in an OB world, which I think we're entering into sort of now, kind of 1 in 4 SMEs are comfortable in that space, so it's going to mainstream. The problem that you've got is no longer availability of data, it's doing something with it. So in our lending sister company, we're using open banking data in portfolio monitoring, so the conversation, so we have always on monitoring. We're also using bank data mainly driven by reading PDFs in the underwriting process. So effectively it's used quite a long, throughout the organization. But the key thing that you've got to do is find what's hidden, the signals hidden in that data. So that's again about the interpretation. But I would say in the portfolio teams, they use it every day. They're trying to find the needles in the haystack and then going on to form the right conversations. And this comes back to, it's data that SMEs already create, it's data that we already have, and therefore it's there and available, make use of it. So for me now, the bottleneck has moved from not getting the data, it's trusting the interpretation and what it's telling you.
Yeah.
Yeah. Kai?
Exactly that. It's the same thing. I mean, what we find is difference in suppliers. So we use one open banking supplier, trying to not mention trade names. Other trades are available. We use one that's really good we use one that's good in the consumer space and one that's slightly better in the SME space. So again, it's getting that consistency, but the fact that we're experiencing different, and you've kindly been in and presented your solutions too. So it's getting something that's complete, and it tends to be piecemeal rather than complete. But I know that will change as you all evolve, and maybe there is some government intervention on consistency. The Open Finance Initiative is not going away, and it's going to increase. So the more that's adopted, the more information that's put in, the more the consistency is applied, then great. But we've found, thankfully, our founder believes in serving the masses. So, we'll invest in technology, but we need a lot of technology to get to the right outcomes. We haven't found, a nice one-size-fits-all that can do everything we need.
Yeah, no, that makes sense. And Tigana?
I think, I just wanted to echo maybe what Kate said earlier about the data is already there, and the key is like, what do we do about it? And I think for me, what's the most exciting for us at Alica is about like, can we take the concept of kind of the lending life cycle kind of more in upstream where we are with the availability of data, and then the way that it can be enriched from all the different sources, is that can we make a world where we can proactively, as lenders, come to you when we know that you will be needing some kind of like loan, short-term, long-term, according to kind of like what your business needs. And I think this is where the aggregation of the real-time open banking data is not, again, I think I touched this, not historical, but we can already now like look forward, predict, and allow us to kind of move towards the customers, not just them waiting for them to like, oh, need some cash to pay a payroll next month or next week, need some money now. So I think it's more where like the exciting stuff is around kind of like how can we move towards kind of like all the aggregation of data to look into an SME's business and cash flow, and really come up with some like product offering solutions where we are seen as kind of partners, not just like a provider, let's say.
Yeah, and you're right, and that's why open banking. Sorry, go on, Kate.
Well, just going to pick up on that point, because I think we can often talk about open banking when we've all got our credit and underwriting hats on today, maybe. But I think what Tigana's starting to point to is revenue opportunities. If you can see patterns in behavior, you know, why do we see a little bit of stress and growth as a bad thing? Maybe it's an opportunity to lean in. So as I'm sure for Tigana as a bank, where off bank and movement off bank by some of your customers because they're being met where they are, you start to interpret open banking data. You can lean in early and quickly and solve their problems, build products. Sorry, that was my link, Tigana. Build the right products for them by looking at what they've got, and then you keep your revenue pool.
Definitely.
Yeah, no, you're right. And it's why open banking vendors like Yapily are trying to do as much as they can with the data. So one, make that formatting really easy so that regardless of where that data is coming from, it's easy to work with, and then also enrich it. So I know, you know, as lenders, you guys do a lot around enrichment, but if companies like us can make that data more intelligent before you get it, then it's always helpful. I'll go on to the next question, which I'll aim at Kai to start off with. But just from the audience perspective, about just over 50% have just answered or contributed to the poll. If some of those others can come in, that would be great. At the moment, the winning, what is the biggest gap in your current creditworthiness process? Manual processes creating bottlenecks is coming out as the highest at the moment. Kai, next question. What does enrichment and categorization fit into your data infrastructure? Where does it fit into your data infrastructure? And how has that evolved? So, because I guess at one stage when everyone was starting to enrich data, it's probably like that. And then now it's probably a lot bigger.
It's massive, but it's what you do with enriched data that matters. I think there's a few things, but you know, for us to have enriched data, the yes is we're saying yes quicker, because essentially what we're doing, and Kate's team will do this, but you're taking data, quantitative and qualitative, giving it to an underwriter to make a decision. Historically, certainly go back 2024 and prior to that, we're all just transposing data. And I would say a lion's share of the work that was done was transposing data rather than interrogating it to make a decision. And if there is any rearview mirror, you know, levying blame anywhere for distresses or credit distress, it would be because the most crucial aspect of the decision process was transposing. And then the important part to make the ultimate decision was just the short, because of the manual processes creating bottlenecks. Where's my underwrite? I'm sorry, I'm just looking at a deal. I need to underwrite it. Yeah, stop bothering me and I'll get this done quicker. For us, the danger I think we have is if we say yes quicker with enriched data and we get to a flow state where everything just goes through without touching the sides, gets to a yes, here's the money, wonderful experience. The ones that don't go straight through, there'll probably be a business decision involving CFOs saying, well, is the juice worth the squeeze? Should we invest time and money to understand why these outliers haven't gone through the process and serve them? Or do we all just, again, we all serve the core market? And what does that core market look like? Kate mentioned earlier, 5.7 SMEs, 2 million are micro businesses. A third of those, were around 32%, don't borrow, they use personal credit cards or they're sat on cash reserves. So it's a small addressable market and we're still going to have the same no's. So for me, the enriched data it's created a plethora of information. I just mentioned our logic hasn't changed because underwriting fundamentals don't change massively. We need to make sure that the enriched data isn't just giving us more data, it's giving us additive data that makes us make a better informed decision. And ultimately, what's that for? Yes, revenue, yes, profitability, but also service customers. What does that do? Creates greater GDP, creates a greater country for us to operate and work within. So I think, yes, we've certainly got lots of data, and we've certainly got bigger technical costs for all of those APIs and calls of data. So I think, yeah, someone needs to take on a task for you is to access that data, give it in a consistent fashion where it does provide, additive services. And certainly, you grab a manual bank statement, you can see when people have paid PAYE, VAT, when they're going to pay their annual insurances, when they've got accounts payable or accounts receivable, when their liquidity is going to be tight. So wouldn't it be wonderful is rather than the customer applying, we proactively speak to the customer and say, you're going to need money for this bill, and these characteristics are not in your favor. If you change behaviorally to this, then computer says yes in the future. That's ultimately what good looks like.
Yeah, that makes sense. Tigana, same question. Oh, you're on mute.
Dear.
You're on mute again.
I'm just
key.
Echoing what Kai said. So yeah, it's I 100% agree.
You agree. And Kate, anything to add?
Yeah, I mean, I think we just need to remind ourselves automation is not the objective here. Kind of better decisions are. And, that's what Kai has said. This is about better decisions. And in my view, the role of the underwriter still exists. But what our job is to take away the time that they're spending, I think Kai used the word transposing, and put it into the time they're actually spent thinking. It reminds my son, who came back from uni and said, I spent 80% of my time reading the text and 20% of the time writing and thinking. I'm like, that's the wrong way around. So you need to switch that so that they're spending 80% of the time on actually interpreting much better quality data, and that's the job of automation.
Yeah, no, it makes sense. It's interesting. Before I get on to the next question, actually, I'll just extend on what you said, Kate, but we'll put up another poll for the audience. Let's see if we can get higher than 60% answering this one. But you're right. I think when we look at Yapily's customer base, automation has been really important for things like consumer lending, especially for small amount of loans, because they have drop-offs, they have to deal with all of that. When it comes to SME lending, less so, but obviously a lot more on reliability of the data that you're pulling in from the bank. But it's interesting to hear your points. Right, the next poll is up. What's the biggest challenge your team faces when working with bank transaction data in the credit decisioning process? So I'll leave that up there as well for people to answer. But the next question or the next segment I've got is kind of features a bit more around AI, as we're seeing that become fairly integral now in the lending process. Either there's companies that have got there first, Alec is one of those, and there's companies who are looking at it to see how they can roll it out. So we're going to explore AI in the context of lending and credit decisions specifically. And so the first question, which obviously I have to ask Tigana, it makes most sense, is Alec Bank recently launched fully automated AI loan decisions in minutes. What was the thinking behind that, and what did it take to get there? Which sounds like a massive question.
Yeah, I think I already gave little snippets from the previous questions. Yeah. But I think, again, for us, it's about AI becomes supplementary to the life cycle, not substitution. So for us is, again, taking the example of one of the products that we have, which is asset finance. Traditionally, again, application has been back and forth with our asset finance operations with the brokers. And I think this is where we identify that we cannot kind of shake off the system 180 degrees altogether in a short amount of space. So whereas, yes, would it be great if we see a world where, the brokers can click on, a very, very automated way of getting the decisioning in very short time. But I think it's about identifying, okay, what can we do now now that we have this technology? How can we really leverage what it can give us, which means then, as I already mentioned, I think we built an operations where now our agentic AI reads this inbox, the shared inbox that usually monitored by our team, into a package so that the team can then review and escalate if they need. So not replacing the humans at all, but I think it's again same with Kate's son is about like, can we use the time and the effort of our teams actually on the kind of like important parts, not just the kind of manual work that is being done. So, and then maybe just want to call out like the impact we see is really positive. So a 50% of applications in asset finance are now auto decisioned because of this. And also 50% time saved on the application because, as I mentioned, it's everything is pre-filled, everything is already there. Still, the broker needs to go to the portal, but then they just have to like check through that everything is correct. So that's really exciting for us. We started off with a pilot with the 2 brokers. Now we onboarded everybody. So we really see really high traction and such a game changer for us.
Yeah, no, that's very cool. And it's great to see SME lending being used in that way. I'll go on to a next question because that one's very much aimed at you, Tigana. But the next one, which I'll start with Kai, is how are risk teams thinking about accountability and governance when the decision is fully automated? Because I guess, obviously, Kate, I know he's going to be able to add to this as well, but how would you answer that?
I think for the quantitative data, I think it's explanatory. We can evidence it. I think the area where there is a weakness, and looking back at the answers on the last poll, most people have put messy raw data. I'd add to that sentence probably incomplete data. So if an SME has got one account that's really good, high credit balances, really good activity, but they've got 3 other accounts. One of them's overdrawn, one of them they're moving money for related party transactions, one of them's a deposit account and they're sat on big reserves. It's incomplete data, isn't it? It's not giving you the full picture. So I think ignore that incomplete status for a second. But where we've got all of the data, it's enriched and it's full. I think the quantitative aspect, there'll be a rule somewhere, a binary code in our decision engine. It'll say yes, no, or if it's, we try to remove all subjectivity. So it is evidential. But where there's qualitative data and we're trying to rule out the single point of failure, so it depends. If these characteristics are wrong, but elsewhere there's a compelling reason to do that deal, we would write some narrative, the underwriters would write some narrative. But what your question's based on is, straight through process, binary yes, no. I think the yeses, to get to a yes, it's evidential. The no's, we might not be able to evidence the rationale for saying no, because we've said no because they didn't have the right characteristics. And that in a fair world is not the right outcome necessarily. You'd probably need manual intervention. And I think whether you use a tiering system or a RAG code, you want those no's before they are in an absolute decline. You want those to go to a human to sanity check the reasons why.
Yeah.
So I think from a governance perspective, we did say to the FCA a couple of weeks ago at an FTT event, we did say, don't retrospectively regulate AI when we're already on a journey. Everyone's adopting it, everyone's using it. If you regulate it in the future, then regulate the future. Don't try and retrospectively apply, because we're all doing it and we're doing it for the greater good, not just for automation, but for the greater good to get better decisions.
Yeah, no, that makes sense. And Kate?
I think Kai's covered a lot of interesting points there. I think it is about the edge cases, and it's easy to do a quick no, right? You just don't write the edge cases. I think you touched on other points, which is about explainability. So understanding what's going on so that you can write those edge cases better and don't just use all that's going on to make it easier to say no. But fundamentally, where does governance sit? I firmly believe, the agents can work as well as the underlying data. Poor data equals amplification of poor decisions. Good data will enhance how the agents can help the human. Overcoined term, but human in the loop is key. And I think that's, and that the triaging and where you put the humans and which decision points or inflection points is actually key, but humans are accountable. So let's not get to a world where we think the agents are accountable. The humans are accountable. Automate at your peril, step in, take accountability, but lend to the marginal cases too. I think Kai's making interesting points there about access.
Yep.
No building Cyberdyne. Is it Cyberdyne? What was the Terminator AI computer? All right, that's thank you for those answers. We're going to run one last poll before we go into the next segment, which we'll put up now. But while we're waiting for that to come up, in this section, we're going to look at the role of open banking. We thought we'd throw open banking in there in a big way for ongoing monitoring and payments across the credit decisioning. So far we've talked about, I guess, the use of data. Now we want to talk a bit about payments. And so I'll ask you, Kate, on this first question is, how is your approach to portfolio monitoring shifting beyond the point of origination? I know this was a subject that we talked about quite a bit previously.
Yeah, I mean, you know, this is my kind of specialist subject. I think this is the white space where, you know, overcoined, you know, dogs are for life, not just for Christmas. Loans are for life, the life of the loan, not just at the point you underwrite. So it's interesting how so many people down tools at the point of underwrite and then go, right, here we are. Now you have a portfolio. Again, to the point of fairer access, helping the SME, making them lendable to. If you are always looking at what's going through the account, and now you can remove some of the friction. You've given them a loan. It's reasonable to say we want to have you link your bank accounts, and most borrowers are fine with that post lend. And now it's our job to spot the signals, right? You know, defaults are the least interesting events in lending. The interesting question is, what are the signals that you missed 6 months earlier? And so for me, always on monitoring, surfacing the right information. Can I now see a time to pay? HMRC has moved to rounded amounts. They're probably backing a bit up against Crown. If there's a default, I'm not going to get any recovery. Better I step in when I can see that behavior emerging. So and so I think this is, in monitoring, it's the biggest gap. We should be using it more. Is where friction can be least, because you can ask the borrowers, and consent and reconsent are, you know, they are good and improving processes. So the job then is to surface the signals that matter. So Kai sitting there, he can't deal, you know, we need to show the wood for the trees. We need to find the needles in the haystack and then form the right conversations, right? Our job with borrowers is not to beat them with a stick. It's to form the conversation early when you can do something about it, because in SME world, failure happens fast. Form it early. Some people call these lime cases or amber cases. They're not watch list. They're not fully green. Form those conversations early. Talk to your borrower, help them out, and you can keep those the lending on track. So for me, I'm again all in on life cycle, in life monitoring. That's where we can make the difference for the SME.
Yeah, I'll ask the same question to Kai.
You know me, I think that the two things I'd love for the government to do, or the regulators to do, is to with the Open Finance Initiative, make it compulsory. PRA regulates our banks. Make it compulsory for everyone to be a party to open finance. Make it consistent. Make the language consistent. I know there's lots of legacy systems there to be changed to bring it up to speed. And I'd be a huge fan of scrapping the 90-day rule and just, yes, there's an application which at the moment is causing abandonments in the application stage, but I think that's familiarity, moving beyond the early adopters and getting to people to understand that it's not a bad thing, and it will, you know, be in your benefit if you provide that access. And then I think rather than consent to opt in, I think there should be a consent or a request to opt out. So I think all the time there's indebtedness, I think the open banking should be live. And then once the indebtedness ends, then the connection ends. But big but again for the future is if they want the proactive lending and what Alika and I were talking about earlier, if you want us to come to you when you need your HMRC's paid, your investments paid, then, you know, leave that access permanently. But then that could be consent driven. But I think, yeah, there's a great opportunity to make open finance open to everyone. And I think the biggest way to do that is to not legislate it per se, but make it open all the time. There's indebtedness. And again, educational piece, giving us access to your bank. We're not Big Brother. We're not looking at what you spent on shopping or where you go on holiday. We want to just learn what your behaviors are so we can help you.
Yeah. And Same question to you, Tigana.
Yeah, I think just echoing what everyone's been saying, I think for us it's about kind of moving towards the customer and not the other way around. I think we're really keen to kind of utilize all the technology that we have around, like, enriched data and, real-time data when it comes to open banking, in order to, and also not just for specific bank account, this bank account, or even like our own transaction. It's across all the different kind of aspects of SMEs, right? So I work a lot with like integrations, for example, looking at things like, okay, we want maybe integrated with the compliance platform or payroll platforms or HR platforms, to just understand what are the patterns that we can kind of foresee, and then being able to really like proactively be that, a business partner as a bank, and not just like, okay, when you need something, we'll give it to you, or no, we won't give it to you. Mm-hmm. So, yeah.
Yeah, it's a great point. We worked with a lender who was monitoring accounts. This was in the consumer space, but they would use that monitoring to spot customers they thought were starting to get into trouble. And then when they found them, they would offer them a 90-day holiday period to try and get back up. And actually, it really improved the recurring of the revenue that we're getting back from those customers. So rather than defaulting and disappearing, a lot of them stayed, because not everybody is deciding not to pay their loans. It could just be something's happened in their life.
I think that's key. That's constructive conversation. Sorry, I was going to say, Jason, but lenders must have constructive conversations. And then, you have access to data, you have it real time. Kai's made the point about moving from retrospective to looking at today. It's our job to have constructive conversations then.
Yeah, well, I think you're right. And so I now have one last question for everybody, and I'll start with Tigana. So how does combining live financial data with account-to-account payments change your approach to collections, and what does that mean for borrower experience and the bottom line? That's quite a long question, but
yeah,
there's a lot there.
Am I mute? Oh, okay, no, I'm good. I think it's an interesting journey we're on. I think we're Alika. Maybe previously we've been seeing, you're in lending, I'm in payments, someone else is in the deposit. So it's maybe a little bit kind of a split of like how we will look at each product. But when we kind of look at the life of SME, this is where it gets really, really exciting for us, because all the data that we get from the customers from one product can actually be used to surface another product, where we can really like kind of help the customers and be kind of more embedded. But I think what I would like to say to that is, like, I think there is a really important, I think it's back to around the education part. Like, does the customer know when they give consents that, we will this is the use of, like, we will help you in your kind of day-to-day financial management. So for us, it's about like combining, okay, we are started, so in payments, we've built with Yapily our account top-up kind of feature where the customers can now fund the account from the Alika account from other banks. So that's been really exciting. So it's about like extending to that, right? Okay, can we kind of go to the deposits product, and lending is one of them that we're most looking at as well. So really exciting. I think it's also like evolving things. I think excited to also with the BRP coming, there is the aspect that gets really exciting is like, how can we for SME specific use cases, we leverage what the open banking can offer, what the AI can offer to make our SME customers life better.
Yeah, no, there's some great points there. Kai?
Yeah, I think a couple of things. So we're talking about, I guess, embedded finance, but also what we can do with that. I think it'd be really useful to have, sight and on the payments. We have customers that might bank with, I'll use Alika because they're on the call, might bank with Alika, but then they transfer cash out, probably to a deposit account or a reserve account, maybe fixed term deposit. Then they might transfer money from there to an FX provider that lets them do a trade finance deal and gives them a US dollar payment. And we don't have the full view of that cash or payments. And it comes back to the point I made earlier about open finance. If we've only got access to one bank account, whether that's good or bad behaviorally, what's going on in that account. If they've got deposit accounts, trade finance facilities, electronic, they might have EMI products elsewhere, we're not seeing the true behaviours of that SME. And again, that could be to their detriment, maybe in their favour too, but in most cases it's probably detrimental because we're not seeing a full picture. If you go back to old-fashioned banking, it would have been an independent business review. A bank manager, a relationship manager would have sat with an SME and they'd have learned, what their inside leg measurement was, what payments they make, who does their car finance, who does their mortgage, who does their commercial mortgage, do they have trade finance, do they have invoice finance, do they have asset-based lending? And they'd have come back to the branch with all of these opportunities for all their colleagues. We just need to create an electronic version of that, which is, it sounds like Alec are doing on a smaller stage. Lovely doing the same, consumer credit, EMI, credit cards, banking or banking agency, deposits, etc. So yeah, the more you can evolve and get a more holistic view of the customer, the better you'll serve that customer and the better their experience will be. So I think, yeah, there needs to be more work on embedded finance and more work on open finance to make it, if you put in Kai Hunter, it tells you where Kai's bank accounts are and who with and what he's doing with it. And that true oversight will enable the banking and finance, the non-bank financial institution space serve me better.
That makes sense, Kai. And I'll last point for UK, and if you can summarize your answer, because I have a question from the audience that I think is a pretty good question. So I want to ask all three of you it before we wrap up.
Oh, sorry. No, I didn't have much to add on what Kai said. Sorry. Surface area, I think he's talked about meeting people, and to this question, seeing it all, meet people where they are. And just a little nudge to you guys in the payment space, getting things like CVRP working in a lending context is really important, because direct debits et al. Don't work. So we need to find a way of people paying us quicker without holding on to their money or reserving their money longer. So we're looking forward to what CVRP can bring.
We are working with the regulators to make that more positive. But I'll ask this quick question to everybody. This is from Andrew. I don't know where Andrew is, but thanks for the question, Andrew. Do you think open banking has, do you think open banking has reached the point where it should be considered standard evidence in SME lending rather than an optional extra, which is quite an interesting question. So seeing as I was on UK, do you want to answer that?
Look, I mean, I think, I think it should. It's not fair to look at SMEs in the rearview mirror. We talked about it. You've got to look at them today, what's going on today, make a better decision. They have the data already. Stop making them put together data that they're sort of engineering to fit your process. Look at the traces, the information they already have. I think it should be mainstream. I think now 1 in 4, 1 in 5 SMEs are used to open banking. It's all there. Let's stop making it difficult for SMEs. Let's remove the friction, look at what they've got, and it's our job to interpret.
Good answer. Tigana?
I think for us, I think it's really interesting, because I think I've been working in open banking for a little while, and I think at the end of the day, for our SMEs and for our customers, it's really interesting the wording that's being used, or like the branding of what open banking is. And I think if you ask an average dentist somewhere in Midlands, open banking probably doesn't mean very much to them, but it's about like, what does that actually mean for me? And I think this is where, when I try to explain to open banking to our SME customers, it's like, oh, it's paid by bank, when you can pay by bank. And yeah, it's about kind of like the branding of it. I think, the
benefit. Mm-hmm.
Yeah, exactly. And I think we, as the working in this space, really have to think about, like, customers probably don't really care about the technicality, what is under the hood, but a lot of assurance in terms of, is it safe? So you can just do 2 clicks instead of have to upload. Like, and I think this is the things like that we care about. Or you can revoke the data, you can revoke the consent as anytime you want, this kind of thing. So I think open banking is being a default, yes, but maybe don't call it open banking, just call it like, okay, your connection, banks up to each other, etc.
You're reframing it, Tigana, as you should, because you're saying, what's the customer benefit? Sell the benefit, not the product.
Kai, you've got...
Yeah.
I'll be really quick. I think
got a minute.
It's becoming standard and should be standard. And in an old-fashioned credit, cash is king. Follow cash. Don't follow something that someone filed 10 months ago and for the prior 12 months. Something that's 22 months out of date. What does that tell you? Nothing really. So yeah, follow cash. So open finance initiative needs to be enhanced and made better. But open banking was, yeah, we just need to educate.
And I think on that, you know, picking up on what Tigana said and what you finished on is, you're absolutely right, because we all assume that everyone knows what open banking is. And we work a lot with customers on that messaging before they connect their account, because you've probably seen it when somebody connects their account, it's like, oh, what's going on here? But you need the right messaging to make people realize that what they're doing is beneficial to them and obviously the whole process. Guys, listen, I'd like to thank you very much for today's contribution, even though I thought there was only going to be 2 of us on this call today. But thank you very much. And I hope that the audience has found it insightful. I've learned a lot more today about lending, which I suppose is a good thing, since I look after lending at Yapily. But listen, guys, thank you very much. The audience, I hope you've enjoyed today. If you have any questions, feel free to reach out to Yapily. We'll happily answer them. And if you've got any open banking needs, I know it's cheesy, feel free to reach out to us. But thank you, everybody.
Thank you, guys.
Thanks, everyone.
Thank you.
Lovely to chat.